Welcome to Investing Angles, your edge in the markets. In our videos, we'll unlock the secrets of the charts with advanced techniques like Elliott Waves, candlestick patterns, and powerful technical indicators. No fluff, just real-time examples that you can apply right away. Watch daily, sharpen your skills, and see the markets from a whole new angle. Let's do it together. But before we get started, please make sure to subscribe. Today we talk about oil and our call that we made late last night when after that oil lost about 3.5%. And also in this video we'll check what's happening with Brent and a few huge stocks oil related like Exxon Mobil, ConocoPhillips, and Chevron. Let's get started. So these are the candles. What we are seeing here is a very strong bearish move on the 12-hour frame, which we spotted yesterday, and today we had a huge bearish engulfing, which engulfed technically 4 green candles together, and this is considered a very strong move. And this move was not only for this one, for the weekly frame, for example. At the beginning of yesterday and even today, the candle looked green and very bullish. However, it transformed into a hammer, which has much better chances to go down. And so the next week is likely to be bearish. And another thing that we are tracking right now is the monthly frame, which is strong bearish engulfing. And by the way, this formation on the daily frame, it reminds me of something else. If we look at silver, for example, this is silver, the closure of the week silver. Do you see any resemblance here? Last 4 candles here and last 4 candles here. Well, just I would say be prepared for silver move next week, and especially if we consider 1, 2, 3 bearish 3 black crows here on the weekly frame, this might be a very significant one. This is just a side note. So let's get back to oil and have a look what we see from the different angles. So this is the chart that we discussed yesterday late night, and this was our preliminary targets. So far we can see that oil hit it one more, and it's going right now, it's already in the lower target. However, I evaluated some technical signals and think that this particular count needs to be reevaluated. So what I'm thinking about is a potential that this wave, which I marked here as wave 3, it is indeed wave 1, and potentially this would be wave 2. And I'm making live changes here so that you can see what will be transforming. We will remove some unnecessary elements here, and we'll check how our wave will transform. So I am thinking that this particular wave that we are witnessing right now, it is wave 3. And let me make some changes here. So this would be wave 5, this is wave 1, this would be wave 3, this would be wave 4, and this would be wave 1, and this is 2. And I remove these 2 right now. So this is the initial wave, and then we have a fairly nice zigzag type of wave 2. And now we need to remeasure everything again. So let's start from the top. We'll have, this is the size of wave 1 here. And now let's measure what would be the size of wave 3. So potentially this this would be wave 3 target, somewhere from here, and I would say it might go even lower, somewhere here, but I wouldn't bank on it right now. Let's see how it moves. So this is potential target for wave 3. For wave 4, once we have a bottoming pattern, we will talk about wave 4. So far we are removing these, and this is how our wave is looking so far. And now we can try to place some channel. So this would be approximately for wave 3, and for wave 4 we might see a different one. And let me place another formation. So this would be potentially for wave 4. This would be a bigger wave. So that's what an updated chart looks like. And let me shift to a different time frame. This is 15-minute now. So we see a clear wave. Well, so far I can see that the wave, especially oil, is strongly oversold on a few hourly frames, and it can trigger a pullback. However, it's not oversold on the bigger frames, and it can continue lower. So once it hits the bottom here, we will consider it as the end of wave 3, and we will be looking for wave 4. Whether it's going to be long and time-wise, and whether it's going to be sharp, it's difficult to say right now. All right, so that's the perspective, the short-term perspective. Now let's move on to our bigger chart. This is a long-term chart. What we are looking for is potentially this move for oil. We've been tracking it for a while. Okay, so now let's have a look at the other frames. So this is Brent, and we are looking on it in parallel with WTI, just to make sure that they are aligned. So technically this would be wave 1, wave 2, wave 3 somewhere here, wave 4 and 5. That's the perspective. Let me switch to a 15-minute chart so that we have better understanding. And a quick, very ballpark analysis will bring us wave 3 somewhere here, wave 4, and would be wave 5 possibly here. We also remember that wave 5 normally they could be the longest wave in the sequence, and this potential we also keep in mind. And another thing, this is Brent candles, daily, 3-day, and monthly. So far everything looks bearish, and there is nothing actually I can add here, so it is aligned. Now let's move on to the big stocks: Exxon, Chevron, and ConocoPhillips. So what we are seeing here is bearish closure today, fairly strong one. I would say that the most bearish were Chevron and Conoco. They closed with inside down candles, strong ones, similar to bearish engulfing. Exxon is slightly less bearish, but still it formed a strong bearish harami candle, similar to what it made in January, exactly a month ago. So this, if we see a strong move on Monday, strong move down, we'll consider it as a reversal. And we are seeing that all these companies are aligned very nicely on their turns. And if we look at the weekly frame formation, for example, we discussed Chevron last week, saying that it had a chance to form a bullish reversal pattern, and it had another chance this week to form a bullish and reversal pattern, closing, trying to move above this line, but it failed, and now we are looking for falling three methods formation on the weekly frame, and I think that somewhat similar is happening here. No, it's a different one for ConocoPhillips. It formed a thrusting line, which is considered as a bearish continuation candle. On the weekly frame, it lost 200 days, 200 weeks moving average, and made a fresh 50 by 100 weeks bearish cross. Well, everything looks bearish here. And now let's move on to Exxon Mobil, and I would like to look at the smaller frame right now. So what we are seeing here, this is the nominal top, which was what, 126, and the wave here down is impulsive, the first wave, and we go to this quick sketch here. So this is 1, 2, 3, 4, and 5, and this wave, the next wave down, is also impulsive, and this is obviously a corrective wave, and it can break like an expanding diagonal, then the ugly wave B, and the potential impulse for wave C. So ABC formation here, and what we are looking for maybe on a bigger scale. So this is the potential. Oh, sorry, I need to redo this. So this is what I'm looking for. This is wave 1, wave 2, wave 3, wave 4, and wave, I did it wrong. One more time. So this is wave 1, 2, 3, 4, and potentially looking for wave 5. Let me change this to a different degree so that we are seeing, let's say this is 1, 2, 3, 4, 5. And well, if we see a strong move down here, this means that the Exxon might complete a big impulse downward. This would be an impulse of a higher degree. And what we know about the impulses of a higher degree, they tend to repeat after a consolidation. So we might see a consolidating phase like this, for example, for several months, and the next wave down. And if we look at the bigger frame, bigger chart that we shared last week, but we've been tracking it for a long time, and for those who were with us since May 2024, we would know that what we were looking for is this target. We were saying that Exxon had a good chance to hit 125 or higher, and after that it would be looking for wave 2, moving towards 70-80 range. And it looks like this is happening right in front of our eyes. So it hit 126, and now we are looking for the first impulse down. If it happens, then we will be seeing wave B, wave C of wave 2, and the current target is somewhere between 80 and 50, with the most typical would be 66, 68. Well, that's the perspective for Exxon Mobil. And now let's have a look at Conoco. What we are seeing here is, this is the chart that we shared a while ago in January, and this is our target. So it is aligned. So it was wave A, wave B, and now we are looking for potential wave C ending somewhere here between 45 and 79. That's the perspective for ConocoPhillips. Well, that kind of wraps up our quick presentation. So if you like it, just say so. Share the word around on multiple media. We are present at on Telegram, on Twitter, on Reddit, and also check our website investingangles.com. We are offering right now a free reader subscription for select articles so that you can evaluate us deeper. And obviously subscribe to our channel, that you're always at the forefront of what is happening. Like yesterday's video, we discussed it in details and we called a top, and the top looked like this. Well, thank you very much for watching and happy trading, everyone.